Actually, Columbus is what we're going to talk about. The rental and investment properties are not cash flowing.
Because we are so affordable here. You are able to get a house for $150,000.
And that's a jaw drop.
Right. We're projected to be the next Silicon Valley type area, and having it rented out is going to pay off the principal while it appreciates, which means my wealth is just doing this over the next decade.
Hi, everybody. Ella Gurfinkel, Senior Loan Officer, Team Ella, Fairway Independent Mortgage. And with me today, I have the amazing Lauren Lucas with KW Classic Properties in Columbus, Ohio. And Lauren actually is a big time star because she was a guest on not just multiple podcasts, but she was a guest on Bigger Pockets, Cleveland versus Columbus. And it's a pleasure and a privilege to have Lauren here. And actually, Columbus is what we're going to talk about. That's Columbus, Ohio specifically. One of the bigger reasons we're talking about Columbus, Ohio and the real estate market there is what we're seeing on the coasts, on both coasts, and I'm predominantly out of the West Coast, is the rental and investment properties are not cash flowing, at least not with today's pricing, not with today's interest rates, unless a huge chunk of a down payment goes in for the property to cash flow. And again, for the record, we're talking about the 1 to 4 family or 1 to 4 unit dwellings, not the commercial real estate, and definitely not the multifamily. So with that in mind, I'm seeing in my practice, I'm seeing in my experience and talking to lenders and agents nationwide, how the middle of the country is where a lot of the money is flowing to. And I've actually now had clients over the last few years who started investing in real estate in the Midwest, in the South, in the north part of basically the center of the country, because what you can pay for a home as a rental elsewhere compared to Oregon and Washington specifically, you can't even, that's in some cases cheaper than a luxury car. In some cases, it's equal to a luxury car. So is it easier to come up with a down payment for a $500,000 rental or a $100,000 rental? So, Lauren, tell us about the market and tell us why people from the West Coast specifically should be looking at Columbus for their investments.
Yeah, so during COVID, we saw a huge influx in investors coming from California, Oregon, even out of the country, because we are so affordable here. And obviously, prices keep continuing to rise, inventory is low. The biggest thing as an investor myself as well is understanding not only the cash flow, but also the appreciation, right? So understanding that, rents have gone up as well, as prices do. Taxes have gone up, everything's gone up, right? But understanding, what your strategy is going to be, what your minimums are, what your buy boxes are, and really honing in, because everyone has their own niche, right? I've got clients who this is all that they're going to buy is this certain list of things, has to cash flow a certain amount of dollars, has to be appreciating this much, has to have, less than 10% vacancy. But at the end of the day, as an investor, I look at, I'm going to hold this over the next 10 years minimum, right? So sure, maybe my monthly per door for this house is only $400, $500. It's paying for the mortgage, it's paying down the principal, it's appreciating, right? But each situation is a little bit different, right? But here's the thing with Ohio is that since we're so affordable and since we do have a lot of, especially in the downtown markets, we have a lot of areas that just haven't really been touched or turned over or renovated or things like that. A lot of different pockets, you are able to get a house for $150,000.
And that's a jaw drop.
Right. And here's the thing too is, even in the areas that have been renovated, if you can find that unicorn or that needle in the haystack that you can get for 100 and 120, if you put $20,000, $30,000 into it, now all of a sudden it's worth $250, right? And then recycling that money over and over and just being creative in your strategy as opposed to, well, it's got to make $500 a door, or I'm not going to buy it. And then saving 20% up over and over and over, right? So there's a lot of different strategies that you can use, and Columbus is the perfect place to do it because you're not having to come to get into the investment game here in Columbus. You can get in for 20 grand. Whereas if you're buying a $600,000 property somewhere else, right, your minimum down is going to be 120 grand. So that's the difference. That's why we see a lot of people coming to Columbus. But also, I mean, there's so much growth here, right? So we're seeing jobs coming in. We're seeing chip factories coming in. I mean, Amazon, Meta, Intel, they've all bought land here. So we're having thousands of jobs created right here in Central Ohio, which is a great opportunity to own rental properties or, multifamilies and things like that, because we're going to have a lot of people here that are just here for a short amount of time. They're here to build it and then they're going back home. Or they're here for, one of the many big hospitals we have, or they're here for I think we have like 32 universities within an hour of Columbus. I mean, there's a lot of things that people are here for a short time. So, we see a lot of short-term rentals. We see a lot of long-term rentals. We see a lot of mid-term rentals, that kind of somewhere between 30 days and 6 months. But the best part of it is because it's so affordable, it's a lot less risky to get in. For example, I have a property that we bought in November of last year, and we paid $172,000 for it.
That's
And
unreal
it's
to us.
renting,
That's
it's renting for
unreal to the West Coast prices.
$50 a month. It's almost the 1% rule. I mean, 1% rule is 100%. It's capable here. Are we seeing a lot of it? No. Off markets we are, but it's just one of those things that you're in 10 years. That same house is going to be worth probably, $275,000, $300,000. And all I had to put into it was 20% down of the purchase price. Now, of course, operating costs, vacancies, things like that along the way. But as a big chunk, all I put down was 20%. And having it rented out is going to pay off the principal while it appreciates, which means my wealth is just doing this over the next decade, right?
Exactly. I mean, like I said, I'm still not over the prices. And as you and I were talking the other day over the phone, if I could, I would. The rental piece that we have in Oregon, I would love to trade it in for, 2 or 3 doors in Ohio. As I understand, you guys don't have the sometimes crazy landlord tenant rules that a lot of the West Coast has. And dare I say, Oregon is probably the crazier of the three. But yet, even with the less crazy in Washington and California, still, you guys are running decently normal in my book.
Yeah, I mean, we tend to be a landlord friendly state, right? So that helps as opposed to our conversation with Oregon. There's so much growth. So many young professionals are staying here because we do have all these colleges and universities. So many people are moving here because of these big corporations. And like I said, Amazon, Meta. I mean, we're projected to be the next Silicon Valley type area, right? But that comes with opportunity is now, right? The opportunity is now. And I forget who said it, and I would love to give credit. So if you know, please say it. But I have heard this before. The best time to buy a house was 20 years ago. And the second best time to buy a house is today. And for me, as an investor, I don't care what the interest rates are. They're going to change at some point. I'll refinance down the line, right? But even with interest rates where they're at, leveraging, right, and making sure that I'm leveraged and diversifying my portfolio with short-term rentals, with long-term rentals, things like that. We flip properties. I just closed on a flip this week, and it's so amazing because as investors, we have the advantage kind of to A, see things before they come to the market, and B, to know what buyers are looking for in that market, right? So for us to find a distressed or dilapidated house and make it what that area development buyer demographic is looking for, it's creating more inventory, which is very important, right? So whether you're looking for a long-term hold to build wealth or looking to fix and flip, I have not found anyone who has found a better market as in terms of affordability and appreciation than Columbus or Central Ohio.
That is actually, like I said, super interesting. How are the property taxes in Ohio? Because one of the things I ran into over my years of doing loans in a number of states, Ohio being one of them. So I'm asking you as an expert, local expert on the ground. There are some states where the property values are affordable, but then the property taxes are through the roof. And one doesn't offset the other necessarily. So, how does Ohio stack up in that regard?
Yeah, I mean, we're pretty affordable still, even with last year, there was a big reassessment. It was a big reassessment year. So a lot of taxes did jump. We're seeing that across the board. However, we have a lot of opportunity zones. So depending on where you're buying, there are abatements. A lot of the abatements are looking, 15 years on the land only. So there are ways that you can find creative deals that I actually just sold a house it's called Wineland Park. So it's just outside of Italian Village in the Short North, which is a very hot area for us. Her abatement was for 15 years on a brand new build in 2012. Still to this day, still till December 31st of 2023, her taxes were $500 a year.
That's nuts. I'm sorry. That's like absolute nuts to
$500
somebody
a year.
to somebody from the West Coast. That is absolute nuts.
Yeah.
Just me.
And I mean, we just sold, the flip that we just sold was in a very desirable school district in a very nice suburb of town with a lot of money that has the zoo and just about every levy passes, right? Our sales price for that house was $640,000 and the taxes were just over $6,000 a year.
That's not bad. That's
So it's not. I mean,
yeah, it's
it's
reasonable.
not. Yeah, I mean, it's not astronomical at all. Again, it just depends on kind of where you're at. Now, we do have a lot of pockets too where you'll get the good school district, right? But city taxes.
Mm.
So there's a lot of pockets where you can kind of finagle and only look in those developments where you get the higher rent due to the school district with the lower tax bill because you're in the city.
That is super interesting. So, if somebody's interested in investing in Ohio, and again, because the coasts have become, let's face it, hella expensive. What are the things, like top three things they need to know about investing in a property in a different state, managing it remotely, and what else?
I mean, quite honestly, as an investor myself, I would almost just immediately budget 8 to 12% for a management company. Because if you're trying to do it yourself and self-manage, I mean, you're going to get burnt out. You know what I mean? There's just so many different things that can go wrong. So finding a management company would be the first, almost an expectation I would set for myself as an out-of-state investor. Having boots on the ground, having someone who has the manpower or woman power to go find the deals, the opportunities off market where you're not going to run into multiple offers or way over asking, so the numbers still make sense. We're seeing a lot more of the creative financing, the seller financing, the subject to, things like that, understanding kind of what your options are there. And I will say too, as a Ohio girl my entire life, it's not just Columbus that is a very good market to invest in, right? We've got Cleveland, we've got Columbus, we've got Cincinnati, Dayton, we've got all these different other cities too, that they're not appreciating as quickly. It's more of a slow appreciation, but in some of those areas, you're getting more, dollars per door. So it's just a matter of understanding, are you in this for the long haul? Or is this a short, I want in, make some money, appreciate a little bit and get out in 2 years, 5 years, whatever that looks like. What is your intent long term? Is this something where, for me, for example, my goal has always been when I am no longer here on this earth, right? I want my kids, my nieces, my nephews, whoever is the next generation below me, I want each one of them to have a house that I am purchasing and doing now. That way, when they get to an age, they can choose. Do they want to live in that house? Do they want to continue to rent that house out? Do they want to flip that house and make some money? Do they want to sell that house and go to college? What do they want to do? But at least setting them up. And there's so many different things that you can do. Again, with the affordability of Ohio, there's so many different things that you can do to build wealth rather quickly. And, taking it back to the beginning of this when we first started talking, and just continuously recycling that same money over and over and over.
That information is absolutely invaluable. And I would love to actually, I guess, see more investment come into up and coming Ohio as the coastal states, West Coast specifically, are becoming quite expensive for investors to actually be able to cash flow.
And I think too, as an investor, there's much more opportunity out there than people think. It kills me to kind of play both sides, being a retail agent for the consumer who's getting beat out by investors sometimes with cash offers, but also wanting to help people build generational wealth across the board, whether they're an investor or a consumer, right? So as an investor, I always say, look for the properties that maybe have been sitting on the market for a week, 14 days, because not only is that going to continue to keep inventory in the consumer's world, right? But also as an investor, you're going to get a better opportunity, because if that house is sitting on the market, you're going to get maybe a lower purchase price, better cash flow, seller concessions, those types of things. So instead of getting into the hustle and the bustle of the multiple offers and, coming out of pocket with all this cash, look for the opportunity, the little carrots that are available in properties that are sitting on the market, and figure out, okay, if I'm buying this purchase, or the purchase price right now is 200, and I can see everything around this is continuously rising, even if I know maybe this is only a 5-year plan, but this area is appreciating at 10%, 12% year over year, I'm going to take my $50,000 down payment and I'm going to appreciate, 50% in the next 5 years. So I just turned my $50,000 not only into monthly cash every month that cash flows, but also $125,000 in equity at the end, and just an appreciation.
And that's invaluable. That is
not counting what your tenant is paying down in your principal.
Yep, exactly. Those are all amazing ideas, Lauren. Thank you tons. If anybody would like to get in touch with Lauren, the information is right there on the screen. And we'll have to bring you back actually to talk about it some more, because the flyover country is not really to fly over. And in my mind, it never has been. But West Coast, come on, don't turn your noses up at the middle of the country, because investment wise, there are some freaking amazing opportunities, and that's what Lauren can fill you in more on in the future 101s.
The Midwest isn't so bad.
Oh, I know it isn't. People think it is, but it isn't.
Anything I can do to help, like I said, I'm here to help people build generational wealth, because this stuff just wasn't taught to us in school, So I've taken several years and a lot of failures and learning lessons and things like that to figure it out. So happy to help in any way I can.
Absolutely. Lauren, thank you again so much for your time and for the amazing info and a great conversation.
Thank you. You too.